Greetings everyone, Joseph James here from SchoolOfTrade.com, March 19th, 2010. Hope you guys had a good time in the room this morning, had a great week. Here's your live trade room recap. Before we talk about the trades we took today here in the room, took a couple on the wave indicator, took a couple scalps this morning. I want to remind you guys about those three important links. We've got, of course, the first link is for our free 3-week trial. Second link, come see our blog. Our blog has brand new articles written on it all the time. And of course, don't forget about our 12-month track record. You can get a copy of the track record, either email us directly or click on that third link, and that will show you guys our 12-month track record. We took one trade on our scalping system today, guys. We took two on the wave indicator, today being triple witching. We weren't expecting to have very much going on, but I wanted to make sure we, of course, had as much opportunity as the market gave us. We were ready, willing, and able to take it this morning. As you can see, 3 total trades. We brought 10 ticks in on the scalping method, 19 ticks in on the wave method. Of course, I'm just going to record the 10 ticks though for today. We'll keep using the wave indicator next week, and I'll be adding that to our trade room totals sometime next week. But as of right now, just getting the swing of things, taking those slower time frame setups in the wave. As you guys can see, having a pretty good month so far though. 5,300 USD in the month of March so far, and just shy of 23,000 for the year of 2010. Let's see, what's the most important thing that happened today? Well, today was quadruple witching, or triple witching as most of us know it as. Quadruple witching, of course, was just recently announced a couple years ago when they released the single stock futures. Basically, we expected to see slow and unpredictable price moves today, guys. Triple witching, quadruple witching, end of the first quarter. We had rollover this week, daylight savings time this week. When you look at my track record here, I look back in time at last March, and I'm quickly reminded, but we saw pretty much the exact same thing last March too. So we're expecting it. The biggest thing though today was we had to focus on our patience. We had to focus on patience and not get too wrapped up in trying to force trades today. Look for the best patterns to take. And of course, don't forget on a day like today where we know it's going to be challenging, remember guys, you don't have to trade today. That's what I always tell my clients, right? If you have a root canal to schedule, or you haven't seen your mother-in-law in a long time, right? Might be a good time to schedule it on your triple witching or quadruple witching Fridays. All right, guys, so we knew what to expect. We, of course, saw pretty much what we expected today in the room. Now, the first trade of the morning here, again, things were pretty choppy and pretty inconsistent all morning this morning, but we did a pretty good job at getting to the best trades we saw. Here today on the crude, first trade of the morning here was at 10.20. Now, this, of course, is on our scalping methodology, much faster time frames, right? Tight stops. So, of course, we got the low of day up top here, guys, the low of day. We came down, broke the low of day here. We made our swing low, break below that swing low, right? There's your breaker pattern short at 10.20. Now remember guys, everything starts around these red lines, right? These red lines here, right? These red lines here, these are the auto levels, right? Marking up these levels of support and resistance for us. So when we break below this red line, the auto levels indicator does its work. We then mark up a swing low. Our swing indicator does the work for that. And then at 10.20 here, we saw momentum pointing down, right? Momentum pointing down, momentum pointing down. We had breaker pattern short, 81.47 was the fill. We got just a little profit there. As you can see, it came down, then bounced right back up. +4, +1, it's going to be 10 ticks or 100 USD. So we move our stop down to entry -1 when we get that first target filled to +4, and that locked in $100 or 10 ticks. That was the only trade we took in the scalping method this morning. And then the rest of the morning here was spent on the wave indicator. Now, let's rewind the clock real quick to 9:45, because actually, now that I look back on it, we took the wave patterns before we took the breaker here on the crude. So here on the gold now, of course, symbol GC, this is the wave indicator. Now guys, this is on a 13 range chart. So it's a much slower time frame than the scalping method, which uses a 4 range chart. Okay, so it's the difference between a 1 minute and a 5 minute chart, right? It's about the same difference. Okay, so you're going to be looking at much slower moves here on the wave indicator. Now that's a good thing, right? Because we have predetermined entries, we use limit orders into our trades, and so there's a lot of good things that come out of the wave indicator, which of course really does a good job at fitting a lot of our clients' needs here. Now, how does the wave indicator work? Well, you can see right here, guys, signal fires off here at about 8:45 this morning on the gold. We then will wait as price jumps to the upside. We're going to make a swing high up top here, and then we begin to pull back. Now notice here we have these 2 yellow lines and this red line here. Now members, we've got a brand new video coming out today about the trigger zones. These are called our trigger zones, all right? This area right here between these 2 yellow lines. So these 2 yellow lines are our trigger zone. And our goal is to get inside of that trigger zone and buy the test of this trigger line. Okay, so we have the trigger line comes into the trigger zone. We get long at this trigger line. Now, the problem we had with this particular entry was at the time, if you guys were with us this morning, my charts jammed up on me and I had to reload my charts. So I got into this trade a little bit late. Okay, by the time I got the charts loaded up, we had broken just above, right, just above the zone there. So I got a little bit of a bad fill, right? Just chasing after a little bit. I wanted to see how this trade played out for you guys here. And ended up taking a loss on it. So the first trade on the wave was a loss. Now, we're going to talk more about how we place our stops and targets, but the bottom line was an 80 tick loss here on the gold. Now, as you can see, that's a pretty big loss, right? But let's look at why we took that loss. Well, when we get in here, we got in about 24.9 was the end up being a fill, about 24.9. Okay, was the end up the fill. It was just above, right, this zone here, right, trying to chase after it, got a little bit late behind it. The stop, of course, down here was at 23 point, right, 23 point, I think it was 23.5, something like that. Okay, so what happens is we have to take 24.9, right, minus 23.5. So what is that? That's a stop loss there, right? 23.9 would be 10 ticks. All right, so it's going to be a 14 tick stop loss, right? That's a pretty big stop. Now, of course, take 14, right, multiply by 4 contracts, right, and then of course you can start seeing how that all adds up, right? It's going to be about an 80 tick, right, a little bit less than that, but an 80 tick loss. Okay, so you're given, give or take here, 50 to 20 tick stop loss, pretty wide stop. But remember, we're going to put our targets very wide out as well, right? I'm going to use a 10 tick first target, a 20 tick second target, so the risk reward ratio is still in line. But if you look at this, though, as you can see, right, don't chase after these things. That was the lesson we learned here, guys, in this first move here. Now, the first trade we took was on the gold here at 944. Got a little bit unlucky on that one. Not really sure what the big reason was why it didn't break for us. All the rules lined up. Looking a pretty darn good trade here. But obviously, we're going to take loss every once in a while. The next trade we took, though, nice big winner. We got all that money back, though, and some. Now, of course, you can see here in the Russel, this trade worked out fantastically here. Same situation, though. We have the short-term, right, I'm sorry, the trend being down. Signal happens right here. Okay, there's your signal. So we break down to the downside. We make our swing low. And then we start coming back up towards our zone. Right, here's our zone again. Right, there's our entry zone right there. Entry zone here from about 678 down to 677.5. We got filter at 677 even. As you can see, we go short here inside the zone. And then, of course, as you can see, price begins to tumble. Now, remember, we have to make sure that our profit targets and our stops are within the right risk-reward ratio. So we look at our stop loss. Our stop loss was a 10-tick stop in this case. Okay, so this red line up here, right, see this red line? This red line ended up being a 10-tick stop. Now, of course, a 10-tick stop, that means I'm going to put my targets at +5 and then +10. Right, I'm going to cut that stop in half. That's my first target. Then, of course, I'll use the stop loss as the second target, and then I'll place my runner. So you can see we took our +5, we took our +10, right? And then we took, of course, our runner. So we took our +5. We actually ended up getting it +13. Remember, guys, we take half the position off of the first target. So it was actually 5 times 2 is 10. We actually got filled at about 6.5. So we got 13 ticks in the first target. We got 10 times, right? We got 20 ticks for the second target. And then, of course, 53 ticks was our runner. So 2 off at 13, 1 off at 20, 1 off at 53. That's a 99 tick winner. All right, guys, almost $1,000 there on just the Russell, guys. So yeah, we took a loss on the gold trade, the first trade, but we made it all back and some, of course, on the second trade. Now, guys, I'm going to make sure we go back over this a lot more next week, because next week you're going to start seeing more of this in the live trade room. Today, again, we're just getting used to kind of taking these trades in the room and getting used to using our trigger zones. As you can see, though, guys, it works out pretty nicely. On Monday, March 22nd, though, right, Monday, March 22nd, next Monday, there's no major news events. We have the 9:30 U.S. Open planned, and we're going to use next Monday as another example to keep going over the wave indicator and keep using our trigger zones. Members, be on the lookout, members. We got a brand new video coming out over the weekend that will talk more about the wave indicator and the trigger zones, how to manage your trades, and we'll really dial this stuff in for you guys next week. All right, let's recap. Trade Room opens on Monday at 7:45. I want to thank you guys for coming out this week. We have webinars on Tuesdays and Thursdays. They're free, so come out and join us. If you want more information about our setups, our patterns, our entry rules, the beginner's course has all that information enclosed in it. And if you want more information about lifetime membership, lifetime Trade Room access, own all the code, the indicators, that's sales@schooloftrade.com. My name is Joseph James. Hope the video helps, guys. We'll see you on Monday. Have a great weekend.